So traders, are we forming a bottom here right now when it comes to the good old stocky market? Also guys, gold right now is screaming. If you are not involved with gold right now, it is your opportunity, your warning sign to say run away. If you're looking for a good trading opportunity, a really good trading opportunity, now is the least probability time to get into gold for a good trading opportunity, right? And I know some of you guys are going to go down the rabbit hole. It's okay, right? Let me explain why I say things. Because remember, guys, whenever we are trading the markets, right, we want to be trading the markets that has a probability, right? So if you're trading something that does something 10% of the time, 20% of the time, how's your longevity in the markets? That's what I'm all about with you guys, all right? So that's what I wanted to share with you in today's video. So let's actually get started with the actual good old stock market here. Right now, the stock market is actually forming a little bit of a support where we are right now. We're actually getting a little bit of a bounce, as you can see. We're getting let me actually bring this up to here, right? So we're getting a little bit of a bounce where we are right now, but you can see there's longer term charts. And let me bring this up to here. So you can see we're getting a little bit of a bounce. What we're probably going to continue to see is we're getting a move down and now we're getting a move back up. Okay, so there's two situations you're probably going to see in the stock market, but the end of the day, it's going to result in higher prices, right? Scenario number one in the markets. Let's see if this microphone's working for me, right? There you go, right? So scenario number one for me is we continue doing the V-shaped recovery and bam, all the way up to at least 50% of these levels through here. That's what we're probably likely to see. That is scenario number one in the markets. Scenario number two is we hold here and we go for another move on the downside. If scenario two does happen, it's going to be the last move for the downside. We are likely to get what's called a false move on the downside. We get here, we're probably going to get something like that. And then we're probably going to get a nice reversal coming back up to here, maybe something like that, and then we get to here. So either way, scenario number one, a rally back up to at least the 5,900 level, 5,800, 5,900 on the S&P. Maybe getting ready right now, and then we can reassess what happens there. Scenario number two is that we do see another move on the downside, but it's probably going to be very, very short-lived. And the reason why I'm saying this is because the market doesn't just go straight down, right? So if we do have another move on the downside, it's already been going down for quite a bit. We have a little bounce and go again. That's probably going to be the false breakout move on the downside. So, and also you can see if I make my, actually, no, let me do this here. Let me blow this chart up here. As you can see also here, this level through here, that level, and the reason why I've got this level through here, guys, is why? That resistance there, this back here, resistance here, and look at all this support through here. So even if we do get another move on the downside, guys, through here, that's going to be very short-lived, and then we're probably going to get the rally back up towards that level through there, and then we can reassess. Does it do a lower high and roll over? Step one. Or do we just go wham straight back up to all-time new highs? Step two. But for now, the end of the day, resulting in the next month, is probably going to be by the middle to the end of April. I believe we would have experienced a nice rally in the markets. How that forms, now you're seeing what I see. Now you see what I'm actually talking about here, right? And so even this level through here, as you can see, if we get a little bit move to the downside, that's what we're probably going to see in the good old stock market. Let's go to the NASDAQ right now. And the NASDAQ is doing a few things which is sort of the same. Now, one thing we want to see with the NASDAQ is this. The NASDAQ is still holding, you can see this level through here. Right, we're still holding this level through here. See that through there? We're still holding this here. So what happens here is this, okay? Is that if we hold here and we continue down one more time, the same thing for the S&P. Let's just say we get something like that. Can that happen? Yeah, here we go. And here we go. Oh my goodness, John, that's it. I told you the crash is starting. And then we get a supersonic boom all the way back to the upside. through there. Or scenario number 2 is we actually get a break and we get back above this level here, and then we make a move back up towards that 50% level in the market here. Either way, the result is, if I blow up my charts here, the result is a move to at least back up towards these levels through here, which is around the 21,000 correction on the good old Dow Jones. NASDAQ. The Dow Jones, look at the Dow Jones here. So the Dow Jones right now is actually holding here. We're not above that resistance level yet. Same situation, right? This is the same thing. If we do hold here and continue down, right? So like a wham a bam and a wham a bam through there. Now I wonder if we get that same sort of thing. Now I'm just looking back here. Where is that level? Okay, it's all the way down through there. Okay, I'm just trying to see support and resistance levels in the market here. And then we also have, that's that level through there. If we do have a move on the downside, then yeah, they're probably going to have a move down towards possibly that through there, and then we get the bounce. Either way, guys, once again, this is why it's so important to squeeze your charts up big time through here, right? Big time. Meaning, like, look at all the data I'm seeing through here. And as you can see, the market doesn't just go straight down, right? We go through waves. So if the market is going to continue down from here, right, and we continue doing this like that, as you can see, right, there's going to come a point in time when we get what? When we actually get the rollover, and then maybe we form the lower high and then break down through there, right? We're going to get that. Even through here, we end up going through the swings. So if you're trying to look for a good shorting opportunity right now because you think the top's in and the market's going to crash, and you think, wrong idea, that the market is just going to keep going down and that's it, it's all over, and we're going to see something like that happening right now, then you know, just go look at all the major crashes in history, and I've done videos on that, and you'll be able to see this, right? So again, we want to be applying techniques that works most of the time, not all the time. And if you're trading based off something that is very, very works 10% of the time, i.e. by looking at gold and silver now, this is the gold market, i.e. when a market makes a really big move to the upside, like here, and then you try to get in, you're trying to buy gold now, or the last few weeks, thinking it's now set for a big move, you know that yes, it can make a big move, but that only happens 10% of the time, where we can just continue to go. What you want to be doing is doing something where you can, most of the time, you're going to have a problem. Most of the time, that is going to work in your favor. The worst thing you can do in the markets right now is apply techniques and trading approaches that what you think, right? And then what happens is that when the market does start to roll over and you then start to apply that strategy through the rest of your trading career, you're going to get run over. Because yeah, you may have made money on that 10, 20% of the time. But we look at the market as a probability basis, right? If something works most of the time, but not all the time. But if you're only trading that thing that happens only 10, 20, maybe 30% of the time that happens, and you're not trading based off 70%, then now you're upside down, right? Now you can see the reasons why you're probably going to get run over by these markets. So it's a very, very, very big, still big, massive warning sign with these markets. I know some people are saying gold's still going up, John, gold's still going up. Just look at the way the markets work, right? Look at even how gold works. It's really important, right? So the reason I'm doing this here, because I know there's a lot of people out there that are really fascinated with gold. But as you can see, even with the gold, it goes up, it goes down, it goes up, it goes down. See how we go through these swings motions, right? We go up, we go down, we go up. Look at this here. Up, 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 up. What's going to come soon, right? We know after a period of time, we go through this here. And it's called the energy phases, right? We go through this energy building phase for a while, market goes up. Then we need to go through an energy using phase. Sorry, energy using phase where the market's going up. Energy building phase where the market's going sideways and building energy. Then we go through another what? Energy using phase where the market is now using energy to buy it up. And after a period of time, we now start to go sideways to build more energy to go for another move. Now we went sideways, we built energy. Now we've been using all this energy. I wonder what's going to come real soon. It's either going to be A, this here, John, that can't happen, you don't understand? Or it's either going to be B, we're going to do this for about 6 months. Either way, guys, the understandings of these markets, if you do get in now and we continue up to 3,100, 3,200 and you're the legend, just understand you're trading based off something that happens maybe 10, 20, maybe 30% of the time at the most. And it's not about being lucky. Longevity, and what I talk about with my private clients, because I'm with them every single week and every day with the private community. And if you're interested in joining my group, you'll be able to see all the details at getjohntop.com. Click on that. I show you my equity curve. I show you what it's all about. I show you all people that have actually done my coaching program. I'm 100% transparent about my own personal trading as well too. So you actually want to see my equity curve, what I've done for the last 12 months, go to getjohntop.com and you'll be able to see that through there. And if you do need some help with these markets, not just to get lucky, but have longevity and been in the markets for 20 years, this is my 20th year trading, then I know I can help you when it comes to these markets, not just about being lucky, right? So go apply for that right now, guys. And I personally will be speaking to you on the phone and we'll have a good chat. We'll chop it up and we'll see if you're a good fit for what I'm actually looking for. But stay away from something like that there, guys. Now, the last thing I want to share with you when it comes to this video here is what I'm pretty sure I actually put on the good old thumbnail. And that is this here. This is the 2-year rate. The 2-year rate. Now, what is happening here? This is where, guys, no matter what you are looking at, we want to be looking at trend analysis first. Remember, this is so important. And again, this is why it's so important to be part of my coaching program, guys, because like this is the stuff that I was talking about with them today. It was so amazing. Everything, no matter, even if we're looking at interest rates, the trend analysis is giving us clues, right? And even on an interest rate perspective, and what does that mean? Even on, right? Even with interest rates, what do interest rates do, right? We go down, we have a rally. We go down, we have a rally. What's the stock market been doing? We've been going through one of these phases, right? Why? We're probably going to get a rally soon. And then we go through a movement on the downside and then we go through a rally. That's what is called, if we're going to form a top in the stock market, guys, we're going to get something like this here because it's the same thing, right? It's trend analysis. But right now we're going through a complete change in trend and we're shifting from a massive round top. Now how's this? 1, 2, 3-year massive top in the markets. We're probably going to see something like that. Now, this is the interest rate, right? The 2-year interest rates here. And as you can see that, firstly, if we are going to form tops in markets, just like with the stock market, and again, this is how markets work on the deepest level, what happens, right? We go down for a bit and then we rally for a few weeks. Actually, this is actually more than, this is actually a weekly chart. And then we go down for 2, 3, 4, 5, 6 months and then we go up, right? This is the type of action we're going to get out of the stock market if it is going to form that top, right? Again, don't trade off based on what you think or this time is different or insert news. Go look at all the biggest crashes in history and they all have something in common. And what is that? They all form the trend. So this here tells me that interest rates, guys, looks like interest rates here are about to see a really big move on the downside and we're slowly forming the top. Then guess what? What happens now? Once we start to break this low here at that 3.5% on the good old 2-year, then we could start to see probably some really big, strong selling coming in this particular market.